Okay, let's get started. So thank you everybody for joining us. We do this weekly Cyberbulls space. In a period this week, it seems like it's slow news week, but actually there's a lot of things that has happened that may have gone under the radar. The first one, I think, is Elon talking about this efforts that Tesla's doing with supercomputers. He did a walkthrough of the Tesla supercompute cluster at Giga, Texas. He's calling it the Cortex. And he says it's about 100,000 H100s and H200s, massive storage for video training of both full self-driving and Optimus. So if he's already doing a walkthrough, it sure sounds like that they're making significant progress. And in a recent interview he did with Lex Friedman, he talks about eliminate um, all the data that's going to come from reality. Because when you have the Tesla bot, it's going to have so much, I guess, video, audio, touch sensing, data that's going to need to be stored and analyzed and trained. He explained what would happen if a bot is pouring a glass of water. And that's video that it's rare out there. You're not going to be able to necessarily find that, in YouTube videos and so forth. They've also confirmed their plans to build the $500 million Dojo supercomputer in Buffalo, New York. So that news came out. Tesla China announced that they created a brand new company called Tesla Insurance Brokerage. They named Tom Zhu to be the CEO of that company. Could that just be a normal Tesla insurance that's spreading around the world, like they have 12 states here in the US? Or could that mean that robotaxi is coming? Tesla Megapack factory in China is moving along really fast. And then I think, Omar, you kind of confirmed with Elon that this particular month in August is quite important. If everything goes according to plan, version 12.5, whatever point ones there are, it's going to roll out to hardware 3 cars. It'll roll out to hybrid Cybertruck. It will merge the software stack of both highway and city streets. It's going to have new features like actual smart summon, banish, and reverse. So it seems to be that there's a lot of things happening, and these are very big, giant objectives and goals and milestones that Tesla's doing. So today, let's talk about the progress that Tesla's making. Many people think that they're so slow. Why hasn't Robotaxi arrived yet? Why don't I have a bot in my kitchen yet? And yet these things are happening, and we're seeing Tesla form into one of the greatest, the biggest supercomputer AI powerhouses in the world. Why don't we start with you, Alexandra? What's your thoughts on everything I just talked about?
Haven't talked enough this week yet. Here we go. I think you're spot on. I think they made the decision 6 to 12 months ago to go all in on AI once they, had the confirmation that FSD was on the rails for good, and have been investing as much capex as possible into that. So that's why we're seeing the delay in Mexico, obviously also for the reason of not being sure that Mexican cars wouldn't have a tariff when they get imported to the United States. So that's another reason. But obviously India and a couple of other, especially Megapack factories, seem to have been pushed further out. And it's actually not only Tesla. I read an article yesterday that there are quite a few battery producing companies that wanted to use the IRA in the United States, but also overseas are stalling their plans for rapid expansion. Big reason for that is the prices of batteries being lower. So for them, it's not as profitable to produce them. So I think it was just strategic decisions who were wisely taken to advance the AI, the real AI, the real world AI branch of Tesla, and we're seeing the first results of that, and we'll see the first result of that financially by 2026.
Okay, you did speak quite a bit, so I'll let you stop right there. Jeff, just went through a whole list of things, and I think the most important thing, of course, is supercompute. And that, are you happy with how fast they're moving? Do you think that they should be moving faster? And what's Tesla's relationship with NVIDIA? Are they able to buy everything they need to buy?
Yeah, no, I think they started in the AI, in terms of like network infrastructure and compute, maybe a little later than others, but you see Elon focused on like that 19 days to get the Memphis site, from brownfield situation to fully operational. And then him doing the walkthrough in Texas, he's doing exactly what you want from an ROIC perspective, a return on invested capital. He's buying, in this case, he's buying this network infrastructure, um, the the uh, the the silicon from NVIDIA and other providers, and he's turning it into a useful product, and he's measuring the number of days it takes them to do that. And you don't actually hear that from some of the other providers, although they are focused on it for sure. But they're focused on it, and they're focused on that time from the procurement of that product into it being operational and producing real output for Tesla and for XAI. So I love that. This is like from a supply chain perspective, from a product perspective, um, this is being executed, I think, really well. And I think the other kind of key foundational aspect is everything Tesla and Elon enter into is a scale play. You go back to their entrance in the EV, you go back into their entrance into making superchargers, into driving the explosion and battery cell production and module capacity. Everything is a scale, and then whatever scale they don't think that they could achieve on the outside of their company with partners, that they go and build it themselves. So everything, Tesla has a signature, Elon has a signature, and it applies to SpaceX. And look at the pace of rocket production. You know, look at the scale and everything they're driving now on the Neuralink side. Like, everything that he enters into is a play on scale, and there's no different with this training capacity and bringing that up online. And it's not a coincidence that you'll see Tesla XAI in the top 3 of that conversation of where's all this NVIDIA stuff going. So it's a big deal. I think it's starting to open eyes on Wall Street, that you're starting to see some of the most recent analyst notes, especially the more bullish ones, Morgan Stanley, Piper. They're really starting to call this thing out. It's like, it's not just an every 90-day thing. Of like, let's count how many cars, let's count the production. There's this other thing going on at Tesla where they're building this AI capability that's going to be really meaningful, to the bottom line, and start ramping up. And finally, you say, like, I implore people, it's August, whatever, 6th, get into your car, drive 12.511, and compare it to where you saw 12.1, 4 or 5 months ago, or V11 from the prior year. And you compare that rate of progress. You now zoom in, and now just look at 30 days ago versus where we are today. And what you're going to find is that their scale on training compute is directly correlated to now what we're experiencing as consumers and the rate of improvement we're seeing in our vehicles. And that tells you that this isn't slowing, it's getting faster. And it's kind of exciting to think, like, where we'll be just a year from now. So I'm pretty excited about what they're doing, and everything Tesla does comes back to scale.
And I did ask you just last week, where would Tesla be a year from now? But we'll save that question later. So, Xander, they just announced, right, that Tesla can now produce a drivetrain every 5 seconds. They can produce a vehicle in Giga Shanghai every 30 seconds.
Did they?
Yeah, it did. And then then Elon, apparently, I don't know if this is true, I think he has been quoted in the past as saying, no matter how fast something is, it can still go faster. Are you happy with the progress Tesla's making? And try to put your objective hat as much as you can, please.
I am unobjective. I think we should just assume I'm a monkey throwing darts here. I don't know if that's the right question for me. Am I happy with them? Yes. I think that I trust the engineers at Tesla along with the jockey so much that can they do wrong? Yes, they can, but they continue to show these like statistics that you're mentioning. So, if we want to at some point during the space discuss the technicals of how the stock is trading and how it's recovering, I think that's where my head's been. I haven't looked at any posts today, and that thing that I told you that I'm working on is making forward steps. So I've been busy.
Okay, thanks. Omar, can we ask you whichever question you want to answer, or maybe both, right? The growth and the progress Tesla's making in supercompute, AI supercompute, and the speed of FSD. So you were the one that posted out, this is what we're expecting in August, and Elon replied saying, yes. Hopefully it does happen in August or September. It's going to happen soon. Or what's your thoughts about the progress Tesla's making?
Hey,
Yeah.
sorry, I only caught the beginning of your question.
You can answer either this progress of AI supercompute or the progress of FSD, because you were the one that communicated with Elon about how important August might be in terms of all the features that might come.
Well, they're releasing updates so fast, it's hard to even keep track of it. And this latest update is just incredible. I'm using it right now. I'm sitting in the car. Hopefully my signal isn't too bad. But it does every drive without intervention. It does it quickly, like a human. It doesn't hesitate. You don't even have to think about it. So this 5 times larger model is incredible. And even hardware 3 is going to get this week. When people get this, I think they're just going to be stunned at how well it's working. And they've got about 35,000 H100s right now. They're about to bring in another 100,000 H100s in the Cortex facility. They're going to begin training models that are hardware 4 models that are up to 8 times larger, start using those higher resolution images. So, they've outlined a plan here to continue to drive miles per intervention down and down and down to the point where users are not experiencing interventions of any kind on a regular basis. It's starting to happen now. So just looking at that roadmap they've lined out, there's no major engineering challenge. Just make the model bigger, add more data, add more compute. It's pretty much guaranteed to get better. So it's really exciting to think about where that's going. And with the hands-free update, for the first time, it's something an ordinary consumer wants to use and subscribe to. And the driving performance is finally good enough that you would tell your mom to use it and not be worried about her getting into some accident before she
To me?
disengaged.
To you, Mama?
Well, I always said
Yeah,
said Omar is going to give me the signal when I should subscribe. Is he giving me the signal or not?
Yeah, I think you should definitely try it once 12.5.1 is rolling out. I think that you would really love it. I mean, it's so smooth and comfortable now. It's like having a professional chauffeur. So I think they've really got a hit product on their hands here. Even well before autonomy, I think this is just something that every Tesla driver needs at this point. And really the move to hands-free combined with the more advanced driving model is the game changer here. When you don't have to worry about the nag and when you can just sit there and it just handles your entire drive perfectly from parking spot to parking spot, that changes everything. So really the most material events that I'm looking at in the business here are the introduction of this product in Europe and Asia and the rollout, across the US to the entire customer fleet. This is going to shock Europe and Asia, China in particular, when they get from the 5-year-old autopilot to this thing that can just handle all their drives hands-free on city streets and highways. And of course, you still need to supervise, need to pay attention. It can make some mistakes, especially in these new areas. But I mean, this is really a game-changing product that people aren't going to be able to live without. Even just in its supervised state, even let's say it's 500 miles per intervention. If it's 500 miles per intervention and you drive 15 to 30 miles a day, you're going to see an intervention every few weeks. And then it just continues to improve rapidly. They're just going to fade into the distance. It's already getting extremely safe. So I think they know what they're doing. It's just balls to the wall on AI. I think the 1010 event is going to be very illuminating. But just looking at their roadmap, the 100,000 H100s, we thought they were supposed to have 50,000. They're now more than doubling the size of that facility. It's going to be bigger than XAI's facility, just the Texas Cortex facility, without even including the other 35,000 H100s they have in Palo Alto or the Dojo. So pretty incredible scaling of their training compute there.
Omar, do you know when they will roll out 12.5.1 for hardware 3?
Before the end of the week.
That's good.
Wow. That's
it.
within
And is
the 10 days.
Still talk about giving a free month to everybody then, or was that just a rumor?
There's going to be an additional 2 free weeks once 12.5. whatever is in wide release.
That sounds great. And now, while I have you, Omar, do you have any news where the October 10th event is going to take place, Austin or somewhere else?
My understanding is it's going to be held in Los Angeles at the Tesla Design Studio.
That's what I've been saying. There you go. Perfect. You have more questions, Alexandra?
No, that's all I wanted to know. If I can say something while we're early still, my pinned post is the letter to Tesla's board of directors to consider the investment in XAI. I know we've had the polls. I know that Elon is supposed to do that. But if we want to have as much documentation as possible that this is a shareholder request, please follow the link. Takes only 2 minutes, just basic information and making sure you are a shareholder to sign that. And then by the end of this week on Sunday, I will print this out and send it to the board. This is more of a legal formality than anything else, because we already have expressed that there is interest, but we just want to make sure we're sending this in the most official version we can. Some people are coming back to me saying, "Oh, do I really have to put my share number in there?" It would really be appreciated, because Tesla has to otherwise do a research on each and every one of us to make sure that you are a shareholder. So if it's not too much of a burden to put it in, otherwise leave it free. And I left a comment space afterwards and just put there. Prefer not to put my numbers here, but please check or something like that, so they understand that you don't mind them making sure you're a shareholder, because they can only take this into account if it comes from shareholders only. So would appreciate if you follow the link to do the survey and also to share the post so that as many people as possible see it. Thanks a lot.
Okay, thank you, Alexandra, for mobilizing the retail shareholders. That's another thing that really helps Tesla move forward. So I want to ask the panel here the question of what is the current rate limiting constraint for Tesla so that they can move faster? Previously we heard that they were battery constrained in regards to vehicle production. They're no longer battery constrained. Then we heard that they were compute constrained, a year, 2 years ago. They're no longer compute constrained. What is it now? Is it that not enough staff members, not enough the chips? They just can't buy enough. What do you guys think is the rate limiting step at this point?
Well, they said that they have both a supply and pricing issue with chips, which I think it was kind of beautifully articulated in terms of like, why would you do your own thing then? So I think that's a good way to maintain the relationship and even put pressure on NVIDIA, but also kind of let the world know that you're kind of forced into this situation. So they may even get some near-term, who knows? They may get some near-term relief, who knows? Or maybe they don't. I don't think they put themselves in a worse position, but I think, they said that they're limited there. They're not limited on auto capacity. They may be limited in some form. We don't know on energy output. They were in the last year, but it looks like they've really ramped that production up. And they would probably say they are limited by not having an Asia facility producing, and that so they're ramping that up. They're going to be limited as they start. This new vehicle production that will be limited in the beginning, but I, I, in terms of like what's a limiting factor, I think, being at this peak Fed funds rate, which is about 3% or 300 basis points above the rate of inflation, is highly restrictive. So that makes buying a new car, in the 6 to 9%, 6.5 to 9% range. That's a problem when that number used to be, in the 0 to 3% range. So that's presenting a problem. So if they can get help there, that would probably help them. Getting more compute would probably help them. And some of these things honestly just take time. They've got to iterate and drive, development work for the bot. They've got to, they got to move a lot of the componentry from the hand to the forearm. So there's just hardcore development work. I don't say they're bottlenecked, but they've got to get to I guess you can say they're bottlenecked until they get to this version 2, production version 2 of the bot. So what else? And then robotaxi, I think it's interventions. They may be gated on interventions and the number of interventions they can get. So that's why I could see them doing another free trial to get more people exposed to FSD now that, on 12.5xx or above. I could see them doing that to get more miles. So that could be a limiting factor. It's not so much the miles, but it's the amount of interventions they can get in those miles. So those are my answers.
Oh, perfect. Very nicely done. Related to that, Omar, if you're still there, do you know why they might have given FSD free to the employees in Tesla China? They started giving them free. Is it because they need that data? It's a great perk, right? Because if you buy a Tesla car and then you get free FSD, then the value of that car can easily double if FSD works in robotaxi. But is it for the data? Like if that's the case, why not give more free, 2 weekers or 1 month and then do that for the FSD owners? And he might not be able to speak. Sat, did you want to jump in?
Yeah, in terms of one thing I want to add is like you see progress in all his companies, and there was like the recent picture of the Raptor engine and how the design, of course, of the years have changed quite a bit, and how it's simplified. And you see how fast also they're building in front of the factory for the fans, for the server that they're making. So there's certain external physical parts you see progress, but as Tesla's doing more software updates and hardcore software AI stuff, you don't see it as easily. But we see it because we're using the product, and I think it's going to catch a lot of the industry and the average person by surprise. The level of progress and the speed in which Tesla's going now, it's like really getting into AI software as a main component of the company, and building out that kind of large server is going to be huge. So I think the progress that we're seeing is something that is going to be pretty unprecedented going forward. And I think Elon's true to what he's always done, which is vertically integrate. So any data related stuff, he's going to do it on his own and internally with the company. So I think also for even in the US, the employees had always been able to get free FSD. And I think that's part of what they're doing in China, as they're gonna release get permission to do FSD over there.
Okay. So in a kind of a related question, right? So what is the rate limiting step? Okay. I'm going to sound really stupid right now, but if I think about the different businesses that Tesla's doing, a lot of them seem to be progressing quite nicely and has good tailwinds, right? So which business is Tesla's doing is the one that you think is struggling the most, right? So if I go down the list, vehicles, obviously you could say that there was a slowdown there, but they're now creating the more affordable vehicles. They're creating their robo-taxi design vehicle. There's going to be different form factors, and there's going to be the new unboxed model. That's been delayed, but it seems to be moving forward. Energy is kicking out of the park right now. That's moving forward quite nicely. FSD seems to have hit a spike and starting to move faster and faster and getting better. The bot seems to have now gone to Gen 2, and they're going to the third generation of it's going to come out by the end of this year. And they've started to announce, pretty big numbers, and seems to be a leader against other bot companies. What am I missing? What is it about Tesla that people are thinking is not doing very well, and the company's going to suffer next year? Is it is it the cars, right? We're just a car company, and all its promises. The movement with AI and supercomputer also seems to be doing really well. Is there something I'm missing?
For me, it's a Tesla Semi factory, the Tesla Semi ramp up. That's the only slow part that I see. The main slow part that I see in terms of all the projects that was supposed to be on a schedule.
Mm-hmm.
Jeff, were you going to say something?
I mean, the cold hard facts of a lot of Wall Street is on this 90-day calendar of looking at relative financial performance, and just EPS is contracted quarter over quarter. So Tesla has to both execute and show that way out. And for the investment firms that have a longer time horizon, that are looking out closer to a year or more, and are really studying what the company's doing with robotaxi and bot, those are the ones that are putting in the higher targets, and believe that Tesla, that this investment in AI is just like they've given the higher multiple to the quote unquote AI companies for their investment in AI. They're going to, some of the analysts are the first to start rewarding Tesla for that, at least in their price targets, and maybe eventually the market will see that. I was just trying to do some math too. Like, what do we think the exposure to full self-driving 12.5 and above is? I'm going to guess it's, thousandths of a percent of the population or less. If you just think of the US and Canada and how many people are there, just the number of people that have seen a Tesla drive itself, this well, is just a very, very, very small number. So the fact that we can see these videos on YouTube and X, the ones that like Omar posting and a couple of others that are, doing a service for the community, or if you could get your hands on it and you're able to experience it, I think you're going to see something that most of the analysts haven't seen or experienced. And, 99.99% of the population have not seen or experienced.
Yeah, good point. That's exactly the direction that I was going with when Herbert asked the question. It's I don't specifically see it like what is Tesla missing. I think what they need is a macro tailwind, and Jeffrey touched on that. Like since Wall Street is so focused on very short time horizon, and how do you get credit for being a tech company when you're credited as a consumer discretionary? So, I think that if macro supports them getting earnings and earnings reaccelerate, I think that that is what then, success drives success. And when they don't have the, looking in the rear view mirror or the side view mirrors, and worried about what's coming, is there another shoe that's going to drop, I think that they could truly accelerate. Seeing them look at macro, cut jobs, cut it early, not be one of the laggards in that regard, restructure. I think that they continue to exhibit the good behavior that you want. And they're always looking for things like the XAI play, and getting, painting the vision is where I think the 10/10 event can really change and open the eyes of a potential investor. But we're still trapped by, like, you see, the carry trade that we're all experts on now, that we didn't know about yesterday, can come out of nowhere, and you have to be able to absorb that on a short time horizon. And not that a company worries about their financials like that on such a day-to-day thing, but it can have an impact, right? If this was a broader, issue with, if we were going to full on into recession now, there's nothing that Tesla can do. Ultimately, their number one revenue driver is cars, and there's pressure on that market. I was describing to my dad this channel stuffing that I learned from Jeff, and Tesla to me is like the clear winner in this entire game that's being played by all the auto manufacturers, and they have all these coals in the fire with all these other industries. So I'll leave it at that. I think that if they can get some tailwinds and some, if the Fed cuts rates, that might just, we might accelerate out.
Yeah, that's a great point. So the biggest headwind that caused Tesla to go down the last several years is the economy, the macro, and we're still in it. And then, of course, if they start to cut rates, this could be positive for Tesla. But something like what happened on Monday here is still up in the air. We might go into recession. Jeff, do you want to speak to what you're expecting to the economy? What if that's going to turn into Tesla's favor, or is this going to continue to keep it down?
I mean, I'm no economist, but I definitely study this and try to understand it. And I think what most people are concerned about over the last, call it 30 days, is that window for a soft landing. And soft landing is basically where they can guide inflation, to target without destroying the jobs market and keeping it around, 4% employment. And that's what a soft landing, because if you could achieve both concurrently, you would have, safely landed the economy. And what people are getting concerned about is when they saw the jobs figure at 114K additions for July, and the target was 180K. That's a meaningful miss. They also restated the June number lower, and you're seeing there's other data points besides that one data point on jobs, and unemployment now has gone, from a trough of 3.6% to 4.3%, and there's a rule that's created by a current economist out there called the SOM rule. If you have a 0.5% move in unemployment, in a given economic cycle, that usually portends a recession coming. These are all rules but there's different input variables to those rules versus time. So you can't just say if this happens, this is going to happen. It's really hard to say that. But then you have the yield curve, I think on Monday, momentarily uninvert, then it reinverted again. It's getting closer and closer. So when you have these interest rates coming down, the markets are kind of saying like, hey, there's a problem here. So I would say the way I would summarize it is that window for a soft landing may have gotten a little bit more narrow. I don't think it's closed. I don't think the jobs market is if we had a negative jobs print, like we net lost jobs, I would say like we're in trouble, but we didn't. And if inflation were spiking up again, I would say we have a problem, but it isn't. It's in the 2.5% to 3% range. There's some real time indicators that say it's even lower. And if you had GDP, growth that was negative, I'd say it's a problem, but we're around the 2% range. So it's kind of low to trend growth, and we're not like knocking it out of the park. But I think the thing that kind of like threw some water on that, that huge drawdown yesterday was this thing called ISM Services. What's the industry supply chain managers that are surveyed monthly, and they're surveyed on the product side and they're surveyed on the services side, and this is on the services side, and basically they're scoring, and if this index is below 50, the economy for that portion is in some amount of contraction. If it's above 50, it's in some form of expansionary mode. The targets or the expectations were all slightly below 50, in the 46 to 49 range, and all the readings were in the 50 to 52 range. So they came in back both above target and in expansionary mode. So I think that kind of threw a little bit of water, and it kind of evened out the the jobs number that came out Friday, and that helped in that situation. So I think from a macro perspective, I think what the markets are looking for is they're looking for some rate cuts. If they come too soon, the markets get concerned. Like, hey, what does the Fed know that we don't know? Although my take on that is there's so much information out there. There's so much high frequency information out there that I don't think the markets would take it as negatively if the Fed were to maybe cut sooner. But I don't think they have to. I think they. By the way, I think they should have. I think they should have signaled that they were going to cut in July, even a quarter point, just to like say we're getting the process started and things are lining up to that. And they should have signaled that many weeks before that meeting at the end of July, but they didn't, which portended that they're not going to cut in July. So my take is they should have started. They haven't. They're probably late. There's this long and variable lag. We don't know what's going to happen. They've got rates in a constricted mode, basically running 300 basis points above where inflation is. And so they're trying to choke the economy to get all the inflation out. And not destroy jobs. But the current job, the 4.3% unemployment is above their year-end target of 4%. So my take is the Fed should be looking at it and saying, okay, I'm above my unemployment target and my inflation continues to come down. I think we're going to get new CPI and PPI numbers next week. And I think that all should be telling for a September. I think they all but basically said that they're going to start cutting in September. So the macro situation as it relates to Tesla is, these rates being at this restrictive level for, over a year, and the rate that they went up has been a problem for the auto industry. It's been a problem for Tesla. I think Tesla entered into an auto slowdown earlier, and I think they'll come out of it earlier as a function of their inventory, their low inventory position, their low network latency, meaning how quickly they build cars and how vertically integrated they are, and their localization of supply around their factory. So I think they're going to enter into and come out of an auto slowdown faster, and I think that's why you're seeing them guide for much larger production next year.
Jeff,
Yeah.
what do you think about, would it have been beneficial for the Fed to, and is this even a possibility that the Fed conducts an emergency meeting and uses something like what we saw yesterday as an excuse to do it and to support the markets? Or
Unfortunately,
it's not
they're
in
going to
their
have.
mandate?
Unfortunately, they're not going to react to equity markets. They're going to react to if there's insufficient liquidity. So if they see something overnight, if they see a big credit breakdown, the spreads start, they'll react to a liquidity problem, and they will do it like on the spot. You'll see it on the Fed website. They'll call a meeting. They'll get their ducks in a row, and they will communicate it like literally the day of. You saw them do that with COVID. They literally saved a lot of the U.S. economy with what they did with COVID, and they had a ton of room to move. They didn't have a ton of room, but they had some room and some tools to move with. So I don't see them, based on the numbers that are out there, to answer your question right now, I don't see them having an emergency meeting. But if something changes with liquidity, we don't know. Like was it just this Japan carry trade, or because of that big drawdown in the Nikkei, did some hedge funds explode? We don't know. Are they going to explode tomorrow? We don't know. But the point is the longer they keep the economy in this highly restrictive category, the higher the probability that something does break. And if something does break and it's related to the ability to get liquidity, the ability to get money, if something breaks in that process, you will see them move in a heartbeat.
Wow, thank you so much, Jeff. This is very useful because clearly the macro is the most important thing. One of the most important things, as we just talked about today. What are the other rate limiting steps for Tesla? And this appears to be one of the big ones.
Look at this. I bring it up, and then Jeff
Yeah.
gets all the credit for like, you see, this is how
Okay.
it works.
Yeah. Good job, Zander. Appreciate you. Of course, dude.
Yeah, I don't need any credit. I just want Tesla to do better. By the way, Tesla can do better, like without, there's things that Tesla could be doing. Like if they could, if they could take their cogs down further, there's things that, that are in their control. It's not, my dog ate my homework kind of thing with the macro economy. But you can see it with the other auto. We just had a space before mine, and I had a, Motorhead, kind of primarily a Tesla bear on, and there's general agreement that the auto industry is going into a slowdown, and you could see the flat to negative sales, or even just very small increases in sales from some of the big auto manufacturers. But if you look at their net inventory reduction in the wholesale, that means how much product is going out their factory doors, but it's basically going into dealer inventory. Their net increase in inventory is significantly higher than their net increase in sales. And so all you have to do is, like, if you just look at the earnings report and just look at sales and EPS, you're going to get misled. You got to look at what's actually happening under the hood. And what's happening under the hood, and what's going to slow down their factories, which is going to raise their costs, which is going to start eating into their margins, and it's going to have them start discounting, which they're doing mass discounting right now with their legacy EVs, is this whole picture of their inventories, both for all combustion, for all propulsion types. Their inventory is growing. So this whole love affair with hybrids, this whole love affair with everything, they're at 75 to 90 days of inventory, and they should be probably in the 45 to 60-day range. So they've net grown inventory like greater than 40% year on year, and sales are single digits to flat higher, which means they're net adding to inventory. This thing's going to unwind and explode here at some point. If you look at what's going on with the rest of auto, they're in trouble. They're not doing a great job of necessarily talking about that. I think Ford may have been a little bit more transparent, but there's a real problem out there. But for Tesla's guiding to higher production next quarter and higher deliveries, and for the rest of the year. So I think, like I said, my theory is Tesla entered and exited out of this auto slowdown. I'm not saying the coast is clear, but they would have theoretically entered and exited faster just due to their lower network latency, their high inventory turns, and their lower net inventory. They would have entered and gotten out of this thing much faster than the others.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.